Now I'm going to discuss value added tax adjustment, VAT adjustment. VAT is an indirect tax charged by the government from the customer. In accounting, we are going to prepare financial statement. Therefore, you have to know how to record in the business point of view. Value added tax charged by the government from the customer. Therefore, this is the government charge VAT from the customer. That is an indirect tax. Separate department available. It is called Inland Revenue Department. Right now, think about why it is effect for business organization. VAT charged by the government from the customer. It is not effect for business, but why it is relevant for business organization? Reason: VAT collected. The business is the person who collect VAT from the customer and give to the government. Government charge from the customer. That part collected by the business. Therefore, we have to discuss value added tax in the business point of view. Business is the person who collect VAT from the customer and give to the government. Right. Therefore, when business going to sales to the customer, business should be registered in the Inland Revenue Department for collect VAT from the customer. If our business is registered for VAT, then VAT can be collected on sales. When business going to sales to the customer, VAT value also can be collected from the customer. That value should be paid to the government. Therefore, VAT collection on sales is a liability. Think about from the beginning, business should be registered for collect VAT in the Inland Revenue Department. If our business is registered for VAT, VAT value can be collected on sales. When business going to sales to the customer, VAT value can be collected from the customer. That value should be paid to the government. Therefore, VAT collection on sales is a liability. And think about VAT paid on purchase and expense. For sales to the customer, business have to purchase from other business. Think about for sales to the customer, business have to purchase goods from other business. Then other business point of view, that is a sales. Our business point of view, that is a purchase. Therefore, other business charge VAT from our business. Therefore, in our business also have to pay VAT when business going to purchase or paid for expenses. That payment value can be collected from the government, can be claimed from the government. ඒ කියන්නේ මිනිස්සුන්ට බඩු විකුණනකොට VAT collect කරගන්න පුළුවන්. එහෙම මිනිස්සුන්ට බඩු විකුණන්න කොහෙන් හරි purchase කරන්න ඕන business එක. ඒතර අපේ business එක වෙන business එකකින් purchase කරනකොට අනිත් business එක පැත්තෙන් VAT එක charge කරනවා අපිට. Therefore, that value should be paid. That paid amount can be claimed from the government. ඒ කියන්නේ මිනිස්සුන්ට විකුණන්න බඩු ගන්න යනකොට ගෙවන්න වෙන VAT එක government එකෙන් අපිට ආපහු ඉල්ල ගන්න පුළුවන්, claim කරගන්න පුළුවන්. Therefore, VAT paid on purchase and expenses can be claimed from the government. Therefore, it is a asset. Think about there are two things. VAT collection on sales is a liability. That value should be paid to the government. And VAT paid on purchase or expense, that value can be claimed from the government. Therefore, that is a asset. That is a theory. First one, VAT is an indirect tax charged by the government from the customer. Business is the person who collects VAT from the customer and give to the government. Therefore, business should be registered in the Inland Revenue Department for collect VAT. If our business is registered for VAT, VAT collection on sales is a liability. VAT paid on purchase or expense is assets. Now see the example. It is given if business is registered for VAT. VAT collection on sales. VAT collection on sales. It is given VAT collection on sales from the customer should be paid to the government. That value should be paid to the government. Therefore, that is a liability. VAT collection amount should be paid to the government. That is a liability. Therefore, think about double entry. If it is cash sales, if it is credit sales, cash account or debtors account debit. Debtor equal trade receivable. And as income, we have to consider only selling price. VAT value is not our income. VAT control account credit VAT value and sales account credit sales value. Total value cannot be considered as our income. Cash or debtors account debit. Total value. But sales account credit selling price and VAT control account credit VAT value. As well as VAT paid on purchase expense can be claimed from the government. Therefore, that is assets. Think about purchase. If it is cash purchase, cash account credit. If it is credit purchase, trade payable, creditors account credit. And purchase value, purchase account debit. VAT value, VAT control account debit. Reason that is a assets. Purchase account debit, VAT control account debit, and creditors account or cash account credit. It is depend on credit purchase and cash purchase. Now see the example. It is given credit sales is given 864,000 including VAT. Business is registered for VAT. Think what it has given including VAT value. Therefore, total value cannot be considered as a sales. It is include VAT also. VAT collection on sales is a liability. Therefore, you have to recognize separately VAT value as well as sales value. And given credit purchase, including VAT value, it is also include purchase price as well as VAT value. Think about business is registered for VAT and given VAT paid to the Inland Revenue Department in cash 20,000. Right from the beginning, recognize separately VAT value and sales value. VAT and sales value should be calculated separately. VAT it is given including VAT value. Therefore, 864,000 divided by 108 into 8. Reason if selling price 100, VAT value equal 8%. Therefore, including VAT value equal 108. Therefore, divided by not 100. Reason it is given including VAT value. Divided by 108 into 8 equal VAT value. Therefore, here VAT collected on sales equal 64,000. That is a liability. It means sales value equal balance part sales. Total value is given 864,000. It is included VAT as well as sales. Therefore, 864,000 minus 64,000. Then balance part equal 800,000. That is a selling price. As our income should be considered only 800,000, not 864. 64,000 is a VAT. VAT collection on sales is not our income. That is a liability. And purchase also given with VAT price. It is include VAT as well as purchase. Then 540,000. It has given including VAT. Therefore, divided by 108 into 8 can be calculated VAT value. Therefore, VAT paid on purchase equal 40,000. That is assets. Then as a purchase should be considered only balance part. Therefore, purchase value equal 540,000 minus 40,000. Then purchase price equal 500,000. Think about VAT collection on sales is a liability. VAT paid on purchase is assets. And given VAT paid to the Inland Revenue Department. Now think how to record in the ledger accounts. First one, think about sales. As our income should be considered only 800,000. VAT collection on sales is a liability. Then total value effect for debtors, it has given credit sales. Therefore, sales 800,000, VAT value equal 64,000. As a sales account credit only 800,000. As debtor control accounts, as a debtor control, and VAT value is a liability 64,000. Therefore, VAT control account credit as a debtor control. If it has given cash sales, he has a cash, but it has given credit sales. Think about selling by sales account credit, VAT value VAT control account credit, and both value debit debtor control accounts. Therefore, debtor control account debit 800,000 as well as 64,000. 800,000 as a sales and 64,000 as a VAT control accounts. That is a liability. Think about business is registered for VAT. Therefore, VAT collection on sales is not our income. That is a liability. Sales account credit, VAT control account credit, both value debtor control account debit. And think about purchase side also same way. Business is registered for VAT as our expense. As a purchase should be considered only 500,000. VAT value is not expense. Therefore, purchase account debit 500,000 as creditors. Reason it has given credit sales, creditor control, purchase account debit as a creditor control, VAT value, VAT control account debit as a creditor control, think about purchase account debit, purchase value, not only 540,000, only 500,000 should be considered as a purchase. VAT value should be debit VAT control account and both value effect for creditors. Reason it has given credit purchase. Therefore, creditors account credit 500,000 as a purchase and 40,000 as a VAT control. Both value effect for creditors increase. Therefore, purchase account debit, VAT control account debit, creditors control account credit, both value. And sales account credit, VAT control account credit, and both value debtor control account debit. Now see the VAT control accounts. VAT collection on sales is a liability. VAT paid on purchase is assets. VAT paid on purchase can be claimed from the government. Therefore, we have to pay to the government 64,000. Receivable from the government 40,000. Therefore, balance part should be paid. Therefore, 24,000 should be paid in cash. Should be paid. But it is given in the example VAT paid to the Inland Revenue Department only 20,000. Payable amount equal 24,000, but paid in cash equal 20,000. Effect for cash decrease. Therefore, cash control account credit as a VAT control. Think about double entry. Paid in cash to the Inland Revenue Department only 20,000, but should be paid further 24,000. But paid in cash only 20,000. Cash is assets. Therefore, cash decrease, asset decrease, cash account credit, VAT control account debit. Now think about VAT control accounts. Balance part we have to pay further. That is a liability. Therefore, VAT control account balance should be carried down now. Credit side increase 64,000. Take that value debit side. Therefore, difference value 4,000 we have to pay further. Liability. Balance carry down. And that value should be included credit side as a balance brought forward. That is a value should be included under current liability. And purchase should be included income statement. Sales should be included income statement. Think about sales account. It has given with VAT price equal 864,000, but as a sale should be considered only 800,000. VAT value is not income of the business. That is a liability. And think about purchase with VAT price equal 540,000, but it is include 40,000. VAT is not purchase. That is a asset. As a purchase should be considered only purchase value. VAT value is not our expense. Then debtor control if it both value and creditor control if it both value. And paid in cash to the Inland Revenue Department during the current period 20,000. Balance part should be included under current liability. Therefore, this is a theory. VAT charged by the government from the customer. That is indirect tax. It is not effect for business. Why we have discussed in the business organization, business is the person who collect VAT from the customer and give to the government. Therefore, we have discussed VAT. For that, business should be registered in the Inland Revenue Department for collect VAT from the customer. Then, when business going to sales to the customer, VAT can be collect. That value should be paid to the government. Therefore, VAT collection on sales is a liability. And for sales to the customer, business have to purchase from other business. Then other business point of view, they charge VAT from our business. Therefore, we have to pay VAT on purchase. That value can be claimed from the government. Therefore, VAT paid on purchase can be claimed from the government. It is not our expense. It is receivable in our business point of view. That is assets. Therefore, this is a legal requirement. All the business organization available VAT, you have to know how to record in the ledger accounts and how to disclose on the financial statement if it has given sole proprietorships, partnerships, company, any organization. Important thing,